What's up, you guys? Paul here with your 2023 Chicagoland March Housing Market Update. Say that 20 times fast. In this video, we're going to cover recent headlines and help you understand what they mean for home buyers and home sellers. We're going to review the recent data for home sales and home prices. Spoiler alert, one is tanking. And finally, we're going to review mortgage interest rates and help you understand what kind of impact they're going to have for buyers and sellers in 2023. So stay tuned because we've got a lot of data to cover in a very short period of time. Let's dive in. Recent headlines are a mixed bag. Checking out this Redfin article, it mentions U.S. housing market loses $2.3 trillion in value. Now, that sounds like a very big number, and yes, it is a very big number. But if you consider what it's doing is it's taking into account the overall value of homes across the U.S., where they were at their peak compared to where they were 6 months later, and that number is down $2.3 trillion. Now, if you figure most people don't really realize that true value because not everybody sold at the peak, and if they did, well, we probably wouldn't be at a peak for very long because it would push prices down. So even though not everybody sold at the peak, it's nice to know what home prices have done since they peaked mid last year. Checking out this other article from Fortune, there's some really good tips in here. The pandemic housing correction is both mild and the second biggest home price pullback of the post World War II era. US home prices are falling for the first time since 2012, as can be seen by the red bars here. It also mentions the pandemic housing boom gains deflated a bit in the second half of 2022. See where Chicago ranks towards the front of that list there. Chicago's given back very little of the gains that it's made during the pandemic housing boom. The home prices are up 27%, and it's given back only 1% of that. Now, compare and contrast that to an area like San Francisco, where home prices are up 24% only, and they've given back 18% of their value in terms of the gains that they made during the pandemic. That's night and day there. You know, Chicago didn't run up as much as other cities did, and it's not given back very much right now. Much more stable market. Another Fortune article mentions there's 124 housing markets that are weathering the home price correction so far. Checking out this national map really gives us a good idea of where Chicago fares compared to the rest of the US. And we see we're in the red, but we're in the red 1.48% in terms of the shift in home values since their peak in 2022. Compare that to an area like San Francisco, that's down almost 10%, or areas like Austin, which is down 7.9%. Or areas like Boise, Idaho, which is down 8%. So we're pretty much moving sideways compared to some other areas that are really giving back some big gains here. And the last one here I found very interesting. It made the US News World Report the most undervalued housing markets in the US, and Chicago's on that list. The article mentions you'll save the most buying versus renting a home in the areas of Detroit, Philadelphia, Cleveland, and ding, 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 Chicago. What they did here is they took into account the mortgage payment to incomes ratio. So looking at how much money somebody's spending on their mortgage payment compared to the local incomes. And then it also mentioned that home prices in multiple markets could fall further because the pre-pandemic level was 22%. But if we look at the Chicago market here, it's showing that home buyers are spending about 24.4%, or about a fourth of their income, on their mortgage payments. Okay, so reviewing the most recent data on housing numbers. This is from January 2023 for the Chicago metro area. We see the amount of closed sales is down 38.8%, meaning the amount of homes that have sold is down almost 40% for January 23 compared to a year ago. If you remember, I said that one of these numbers was tanking. This is that number. We're seeing a lot less homes selling. This is a Chicago metro area, so we're including the counties of Cook, DeKalb, DuPage, Grundy, Kane, Kendall, Lake, McHenry, and Will counties. So pretty much the greater Chicagoland area. Median sales price is up 0.7% year over year at $287,000 compared to $285,000 last year. Inventory is down 7.2%, and the days on market is up 5.6%. So all in all, you can see a lot less homes are selling. There's less homes available for sale now than there were in January of 2022. But the homes that are on the market are taking 5.6% longer to sell. at 38 days versus 36 days. Breaking it down by the type of home, again, this is the greater Chicagoland area. We see the median sales price for single family homes is down marginally by 0.3%. Condos, which are cheaper, are up 5.4%. And that's how we get the overall number of 287,000 for the median sales price. Activity is down about the same for single family homes as it is condos. If we dived into the city of Chicago specifically for numbers, we see again massive decline in the amount of homes that have sold. We see 41.2% less there. Sales price is down 4% in Chicago year over year. The amount of homes for sale is down 12.7%, and the days on the market is up 4.3%. You see a little bit bigger of a disparity here in terms of the type of property. Single family homes are down 8.6% in terms of price. Condos are down 0.4%. And overall, that's where we're getting that 4% average. And to give you an idea of where the historical prices are over the past couple years, here is a chart for the past 5 years. We see the blue line is the city of Chicago. The gray line is Illinois as a whole. And then it's good to watch this because it shows you the seasonality and then also how things are changing this year compared to years past. We just see that run up in prices, which is pretty normal every single year. Where homes that are closing in May and June tend to have the highest sold prices, and then they tend to taper down for the rest of the year. If you're curious, here's a quick look for the state level, the market service areas, by MSA. So it just gives you an idea of how Chicago is faring compared to the rest of the state. You can see some areas are down significantly year over year in terms of not just inventory, but also in terms of prices, with areas like Kankakee down 18.6% and Champaign-Urbana down 12.4%. But at the same token, you've got some other areas that are up. Okay, so that was data from the Illinois Association of Realtors for January 2023. Next up, I'm going to jump to the local MLS to give you an idea of week over week to get you through the month of February so you understand what's going on real time. But before we do that, hey, if you appreciate me making these videos, if you could do me a favor and smash that like button. And as a thank you, I'm going to show you a picture of the bean. Bonus points in the comments if you know what the real name of the bean is. Let me know. All right, so jumping into the local MLS data. Here we see the amount of homes that are selling every week compared to the same week last year in 2022. We see that number is down significantly, as can be seen by the turquoise line compared to the green line. Now, remember that this data is for homes that are closed, so the homes went under contract for the most part 4 to 6 weeks before they closed. And so you got to understand how that's impacted by the swing in interest rates. Currently, you're looking at the amount of homes that are under contract. Again, we see the amount currently under contract is down significantly compared to last year for every single week here. Jumping forward in terms of new listings, again, less homes on the market than we did see last year, but also less homes selling. If we look at sold prices, holding pretty steady. This is for the MLS here, so it is the greater Chicagoland area. Week over week here, you can see pretty stable in terms of prices. If we look at rent prices, overall, rents are actually continuing to climb in terms of the median rented price compared to last year, along with average rental prices also being higher. Okay, last up, we're going to review what mortgage interest rates are doing because we're still seeing some pretty wild swings, and that's having a pretty massive impact on what's going on with buyer demand. If you watched my 2023 housing market predictions video, you saw in that video that I said that that was going to be the main driver for what's going to happen in Chicagoland home prices in 2023. We're definitely seeing that. So let's jump in. Let's look at what interest rates are doing. Here we see what the 30-year fixed rate mortgage looks like over the past 12 months. Definitely a lot higher, where rates were just below 4% starting off February of 2022. And now we see rates are at 6.5%. Definitely lower than we were in October and November of 2022. But we've seen rates pull up. We saw rates go down. Some buyers were being quoted below 6% in January here at the beginning of the year. And now we're back up to about 6.5, closer to 7%, depending on some of the quotes that we've been seeing recently. And if you recall in some of my previous videos, every 1% increase in mortgage interest rates, 11% hit to a buyer's buying power. So if rates go up by 1%, that buyer can now afford 11% less of a home price to be able to keep the same mortgage payment. Let me know your thoughts in the comments below. If you're considering making a move, you definitely want to check out this video right here. And thanks for watching. See you in the next video.